Worldwide markets this week, lower inflation rate, a bad idea. Afrimat offering value, the Valterra update, Sibanye-Stillwater acquisition, I think it looks good. Hyprop and the Mass PLC, and what about a weaker US dollar? It helps US exporters, but which ones? I'm Simon Brown. This is Worldwide Markets episode 620 for 23 July. I'm recording this late Tuesday afternoon. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shift, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shift, powered by Standard Bank. Thanks to Shift and Standard Bank. Remember, Shift, you can now also buy shares, JSE, London, Europe, New York, in your Shift app at the same time. I want to kick off with inflation. I was at an Anchor Media Roundtable event last week. Casey Sprake was there. She's on their fixed income side, and she's the economist there. And we were talking around inflation targeting. There certainly is a sense that we're going to get a 3% target, and it's probably going to happen this year. I was chatting with Johan Els, economist at Old Mutual, on Friday, and he was like, yeah, it's going to happen, and it's going to be 3%. The general consensus out there, this is good news. I mean, short answer, who wouldn't like a lower inflation? Absolutely we would. But Casey made a really good point. She said, okay, if we cut it to 3%, currently inflation's 3.2. That was our last print. So, okay, fine. But expectations from SARB and many others is that inflation's going to drift up to 4. Some even saying 4.4% in the next year. Let's take 4%. If our new target is 3 and inflation is 4, we need to raise interest rates to get it back to that 3%. Our rates are already at insane levels. That would only make them crazy. Our real rate, which is the prime rate less inflation, is like amongst the highest it's been in multi-decades. That would then push it up even higher. So how do we manage that disconnect? Do we do a more gradual approach? So currently the rate is technically 3 to 6%. The governor refers to 4.5%. Do we go, 4%, and then in a year's time, 3.5%, another year, then get to 3%? The view out there is that we will just take a big jump. I get it, but Casey's not wrong. There are absolutely risks involved in that. We'll see how it plays out. But right now, let's be real, there are some risks if we suddenly drop that inflation target to 3%. And that risk is higher interest rates. And to be very clear, nobody wants to see higher interest rates. That is not fun at all. I want to move to the US and the USD, the dollar. We are seeing a weaker dollar. And to be clear, this is part of Trump's plan. I spoke around this 2 weeks ago. He is looking for a weaker dollar, and we'll get to the details of that in a moment. And we have seen it move from highs of 110 at the beginning of the year. It got to almost 96. Dollar index is currently 97 against the rand. It is at 17.53. So we are seeing weaker dollar. This is part of Trump's policy. Now, why does he like a weaker dollar? It makes US exporters more competitive. It makes them more profitable or more competitive. Ultimately, they can choose. So this chart from the Charter guys, who a great email which they send out every morning, and it talks around, okay, so who benefits? Who is getting money from overseas? Who are these exporters? Well, the Magnificent Seven, 49% of revenue is generated outside the US. 49%. That's huge. Nasdaq is 45%. That is huge. S&P 500, only 28%. I got to say, that's a lower number than I would have thought. The S&P 493, in other words, the 500, less the MAG7, is at 25%. The Russell 2000 is at 20%. But what it means is that the tech guys, Nasdaq and the MAG7, are the clear winners here. And we started seeing some tech results coming through. We had the likes of ASML, I hold it, really good numbers. but the market didn't like the future prospects, and that certainly spooked the market. We've also seen TSMC, good numbers from them. There's more coming down. We've had the banks coming out. They were mostly fairly good. I got to say, Citi, I thought, was the surprise one there, Citibank. But as an exporter, you're going to do better in a weaker dollar environment, and that plays straight into tech. They just seem to be, unable to not be winning, which I suppose if you're tech, great stuff. If you're a tech investor, can't argue with that either. We had our latest Standard Bank Power Hour earlier in the week, 10 lessons from 30 years in the market with me, Simon Brown. You'll find that video at justonelap.com/power hour. It was great. And people are coming to the events at Standard Bank and Rosebank. And that's lekker. We're starting to build a community. And that was the idea behind it. Yes, you come to listen to the speakers. You maybe learn some things. But there's folks there who you start sort of building a community with. And that's loads of fun. We've got our next Power Hour scheduled for 26 August, 5:30. You can come along to Rosebank in Johannesburg to attend in person, or the webcast, SA Listed Property Overview and Outlook with Keelan and Gluville, independent analyst. Last year, property had a phenomenal year, some 35%. Yes, off a very low base. The question is, where is there still value? Is there still value? We still got a lot of discounted net asset value. We've still got a lot of decent looking yield. Keelan will delve into that. He will also touch on some offshore property because he covers that as well. And Keelan is old school. He visits the properties. He kicks the tires. justonelap.com/events for more information and booking. And then a quick, I suppose, a request of a sort. We've got a new feature in beta on our website. It is an ETF database. It is not on the menus. You will find it justonelap.com/ETF database. One word. And what it is the ETFs that are listed. And what it then lets you do, for example, you can search by issuer, you can search by fund classification, and you say, fine, I want to look at a local equity. What do we got? There are 3 available. Local equity, tons of them. I thought I was going, there are 23 local equity available. And you then say, well, okay, I'm interested. The Satrix capped or share, we tell you the underlying, we give you the total expense ratio. When was the MDD updated, because that's where we're getting the data from, and then you can click on the code and we'll take you through and show you some more information around distributions, around their top holdings, market cap, and all of that as well. Is it allowed in tax-free? justonelap.com/ETF database. Have a look, see if you've got thoughts and comments. Drop us a mail. We would certainly be interested in hearing your feedback. As I say, still in beta, so you might find a bug. I've been trying to break it for a week or so. So far, so good. So we got the Valterra update last week, Friday. It was largely as expected, I think, in the sense that it was a bit of a horror update. It was to June. So we had the flooding from February, which was a huge cost in getting rid of the water, and of course downtime in terms of production, but also the PGMs hadn't yet started to move. So it was a tough set of numbers, and we saw the market largely sanguine because it is looking backwards. And that's the important point. What we've got now, of course, is a whole different story in that the PGMs are absolutely racing. So if we're looking at platinum and we need to zoom out, platinum is at decade highs, plus decade highs. It's broken support, the resistance rather, at around 1100. It's trading up at 1477. It is looking strong. I expect some level of pullback, but at this point, we are not seeing any. But don't panic around the pullback. Those are just part of business. Palladium, well, it's broken that resistance a little above 1200, trading just above 1300. Maybe looking less strong, but still looking important. And it is absolutely moving. So the Valterra update, we're going to see others, particularly those in the Bushveld complex who had the flooding. We're going to see the prices weren't great. But that is historic. What we really care about is looking forward. That is what is going to matter, and that we're going to start seeing. We're going to start seeing some good numbers coming through from the PGM stocks. We had a really interesting update last week, Monday rather, from Sibanye-Stillwater. They are buying a American recycling business. Now, they've already got a recycling business in the US, but that is recycling PGMs only. What Sibanye is doing here is they're getting into other metals that they can recycle as well. And it's going to, in the PGM space, it doesn't make a lot of difference. It adds about 5% to their gold. It adds about 50% to their silver, and it brings in about 260,000 pounds of copper. They currently have zero copper at all. I like the deal. They're going to get expertise. That's always important. And then my internet dies. They're going to get those expertise, which is going to help them. And they are becoming a weird sort of, I don't want to say weird, a very diverse. They started with gold, and I bought some a little while ago for that gold exposure. I quite like the idea of getting gold and then kind of having the PGMs as a side deal in a sense, and the PGMs have come to market as well. They've got their lithium business in Finland still in development. They've got recycling in Canada. They've got palladium in Canada as well, platinum and gold in South Africa, and now this just brings them more recycling. It brings them skills. It brings them that recycling. It's about, I think it was 82 million, 1.5 billion. I think it's a good looking deal. As I say, I hold Sibanye. I like it for its prospects because of the gold, and gold is small in their life, and that's kind of why I got it. So while PGMs were going nowhere, your gold keeps you sort of safe, and then when PGMs start to run, and to be clear, I didn't know when they would run, but they now are running. Those metals are absolutely going crazy. I've had a bunch of questions about the Hyprop MAS PLC deal. So MAS PLC is under offer from a related party, and then Hyprop on Friday came and said, hey, we're going to give you $24 a share, or we'll give you some Hyprop shares instead. The 24 Rand per share is capped at only 800 million, and you've got to decide by Friday, this Friday. There is a webcast Tuesday evening, which will be between I'm recording Tuesday afternoon, so we missed that. The question is, do I have to sell? It's what I got. And the answer is no, you do not. The 24 Rand, that's maybe not bad, although it's a chunky discount to NAV. The Hyprop shares is not massively attractive. That's currently equating to under 19 Rand per share. And the deal, the MAS PLC is trading around that 24 level. For Hyprop, this makes sense. Remember a couple of weeks ago, they announced that they were exiting the Hyde Park corner. They sold half the business. There's a call and put arrangement so that either party can force the sale of the second half of the business in a couple of years. Hyprop will absolutely. Their stated intent was they want to focus on Western Cape, Eastern Europe, hence MAS PLC, which operates in Eastern Europe, and mega malls. So it makes sense from a Hyprop perspective, but I'm not convinced it makes sense from a MAS PLC perspective. If I was holding that, I would not be rushing off and quickly going and taking the deal. I would say, guys, thanks, but not for me. I was looking at Afrimat over the weekend. The share price has been under significant pressure, although down at around the 45, 46, 44 level. We have got a fairly good, strong multi-year support going back to mid-2021. The problem that they have is a couple of fold. Firstly, it's iron ore. We'll touch on that in a moment. They've also got their the Lafarge deal, and then they've got what's the problem? There's one up by the Mozambican border, and they've had some challenges there as well with the acquisition. They've had to move graves. They've had to move power lines. Andres van Heerden and his team are absolute masters of deal making. Absolutely, they are. They're great at pulling rocks out of the ground, but perhaps they're even better at deal making. And they've always paid well, got good assets. They'll walk away from deals that don't work, and they've made all the acquisitions absolutely work in their favor. And that is a huge deal. It is a huge thing. Most M&As are not successful. In the case of Afrimat, all M&A has. The sell-off has been iron ore, but it's also been worries around Lafarge. It's also been worries around and what is their asset? I want to say... it's completely left my mind. Sorry, blank. I can't remember. But you know the one I'm talking about. It's just out there by the Mozambican border. And they've had some challenges, but they reckon they've got them bedded down. I chatted with Andries van Heerden back when the last set of results came out. He said the debt will be paid off in 2 to 3 years. So the challenges are can they implement it? Can they make it happen? They have a track record that says they can. The other challenge is, what about cement? Where's the demand for cement in an economy that's hardly growing? However, if we start to see growth coming through in our economy, and the general consensus is we should be able to get to 2 and then ultimately maybe even 3% over the next couple of years, that will bring in cement demand. Of course, there can be cement dumping from Pakistan. We've seen that before. We've got PPC updating some of or redoing their Western Cape plants at the same time. So there is competition in the space. If we look at the metrics, current PE 74 and some change, but that's because of the last set of numbers were horrific. Price earnings is expected to grow by almost 500%. That is off a ridiculously low base. But if we look at a forward PE, it's about 11. The mean is 12.5. The price to book is 1.6. The mean over the last decade is 2.4. This is not an expensive stock at this point, and it is on support. So they're around that sort of mid-40s. I think Afrimat is actually looking attractive. Iron ore is not looking great. It is having a bit of a horror time for it. Where is my... can't see. There it is. The iron ore is back at about $100 per ton. Afrimat is profitable at $100. They much preferred it at $220, which we saw in mid-2021. But it does seem to have a good support just below 100, and they still make money at that. They've also got the challenge. ArcelorMittal South Africa is one of their clients. We know what potentially is happening there. But I do think that Afrimat is worth a long, hard look at around these mid-40 levels. Absolutely, I do. I haven't bought. I don't want to front run my own podcast. So I'll make that call later in the week, Monday, so that everyone can have a listen first. We don't want to be front running. Remember, simonbrown.co.za. You can always see my portfolio there. What else is on my mind? So I was going to talk a lot around the budget. We've got another big budget vote this Wednesday. We're learning a lot about how budget actually works. We kind of thought the minister stood up, gave a budget, and there it was. That was how it worked when one party had a majority and the minister came from that party. No longer the case. There was a threat from the DA to not vote for the budget of the education department because of, they say, impropriety by the education minister, lying to parliament, etc. That minister has now been fired, so I suppose they will. The threat was if they didn't vote for it, the budget in of itself, in totality, you've got to go back to the drawing board because you've got a budget, but one of the legs isn't there, and it's education. It's an important leg. That now gets voted for. It does look like we are going to get a budget. And if you're on online share trading, have a look out. There's a new structured product. It should be listed in the next day or two. I will talk around that in more detail next week. Gives you 100% capital protection, and it gives you upside enhanced growth. So another one. I like structured products, particularly those that give me capital protection, so there's no downside, and then you want to enhance my return. Heck yeah, I will take that with both hands every single time. But we'll park this week here. My name is Simon. As always, look after yourself. If you can, look after somebody else as well. And we will be back again next Wednesday. Cheers all.